But you've been afraid that it would not come true. Hitherto, fall in love and you will find that it's just what you've been dreaming. In love and you will find that it's just what you've been dreaming. In love and you will find that it's just what you've been dreaming of. You've always had a dream, but you've been afraid that it would not come true. In love and two, well, you've always had a dream, but you've been afraid that it would not come true. Hitherto, fall in love and you will find that it's just what you've been dreaming. In love and you will find that it's just what you've been dreaming. In love and you will find that it's just what you've been dreaming of. You've always had a dream, but you've been afraid that it would not come true. In love and
Welcome. We are back. I think the chat is fixed. It wasn't working last night, but it should be good. Well, I see it on the screen right now, so it is good now. Hopefully it stays like that. And today was a pullback day. If you watched last night's stream, that's pretty much what I was warning about. Things did look a little bit toppy to me short term. The sell-off might not be over. We'll talk about it. Futures are a little bit green right now. Bitcoin, Ethereum, I don't know, kind of being weird as well. There's really not a lot going on other than just this pullback today. I know there was NVIDIA earnings, but apart from that, I think it was a pretty straightforward day, nothing too complicated. So tonight's stream, just gonna probably spend a good amount of time doing ticker requests for whoever has any requests in the chat. We will do the standard updates on the market first though. So let's get started with Bitcoin, which is still doing nothing after the dump. It's just quietly consolidating. I'm not seeing anything here that's too interesting to me. I'd say overall this looks like a bearish pennant forming. However, a bearish pennant can still break up, and that's actually being tested right now. So this pennant pretty much has developed after your sell-off. It's a bearish pennant because it took place after a sell-off. You saw this decrease in volatility after the sell-off. You're kind of losing that momentum until you get a big spike again, and the probability is typically that this will break down before breaking up. However, it's at least testing the break to the upside right now, so there's still a chance, but that's really currently where you're at. And apart from that, that's really it. Going over to the daily, just I think a lot of indecision right now. On one hand, short term, you just sold off quite a bit. On the other hand, look at this major retrace. I'm sure some people are thinking about that as well. So just need more data. And then moving on to Ethereum, kind of doing the same thing. It's a little bit boring right now in the crypto market, but to some people that's probably better than selling off, and you can probably draw out this same exact triangle for Ethereum as well. So just getting bearish pennants. You've hit a bearish divergence on the 4-hour. I think these imply potentially some more downside, but you never know. They could always break up, and then you break, or what's the right word to use here? You invalidate the bearish divergence if you do break up potentially. We'll see. Then moving on to other markets, the US 10-year continuing to sell off. This is probably one of the biggest shifts taking place in the markets right now. The US 10-year reversing trend, continuing lower after the breakdown in the back test. Support is around 3.5% for this. It's getting closer to oversold, but it's still not there. It's just kind of in a very weak spot on the RSI, and it's at a very high place in its trend. So there still is definitely more room on the oscillators for this to sell off. And moving on to crude oil, you are seeing the continuation of this breakdown and the back test we talked about yesterday, starting to fall back under the $85 support level. Next support's probably around 81 from this low over here and this low over here. Metals just staying the same. Gold is continuing to test this area after breaking out and running up. And then silver is still testing its 200-day moving average. So nothing too much really changed. Even the dollar currency index just had a little bit of an inside day after the bullish pin bar yesterday. And the Hang Seng index is pulling back a little bit at resistance. So nothing too crazy going on in the other markets for once. I mean, it's been crazy for the past few months. So let's talk about the stock market. Last night, I was talking about how the SPY was at this upper Bollinger Band, and that was bearish. I was basically saying I'm looking for a pullback going in towards the end of the week. That might be starting right now. You do still have that classic bearish divergence developing on the 4-hour. That kind of looks toppy to me over here. And then if we go over to the 1-hour, it still looks kind of ugly. You're just trying to hang on to this little support zone. But if that breaks, that could set up your actual sell-off this week, where maybe get a 5-point drop down into this support, which would be about like a 1% move lower, nothing crazy. But 390 is a big support level. So at least you have that. Let me just extend these zones out a little bit. This one's a big one. So you have zones. Nothing much is in between 395 and 390. So if we do break this little mini support, one potential trade I will be looking at very clearly, I could probably set this up right now, set my alert on the 395 breakdown, a little bit under it. And if you give up this support zone, you've got this little area where there's not a lot there. If we go over to the 15-minute, you can see this is very head and shoulders like. You're still holding above it for right now. I think the only thing that could maybe save this would be this. So it's like on one hand, we have this supply line, which could break. You never know. It's not hard at all for that to break. And then on the other hand, we have this. And we are pretty much going into tomorrow at this inflection point where you have both bullish and bearish things taking place. All right, so we have this head and shoulders over here. We're currently testing the neckline. And then we also have this supply line. You could draw that out as like a triangle or a wedge. There's probably a couple of different ways you could draw that out. That as well. So you can see really something has to happen early tomorrow unless you gap in a crazy way. Right over here. Right there. We are lined up for tomorrow morning. So I'm going to try and wake up early and catch either the upside or the downside move, but a break in either direction will happen. I mean, maybe you go sideways at 395 all day, but it's unlikely. So I will be watching to see which way this breaks. It could set up a very interesting day trading day tomorrow, because even if you do get a breakdown, that could set up like a quick sell-off, and then you get some sort of a wedge, and then vice versa. If you get a breakout, then you have to deal with all of this resistance. You might get bearish divergence on the way up. So I feel like it's been a pretty slow week for day traders, but this type of a setup going into tomorrow short term is a little bit exciting to me, at least. So I'm going to be watching this tomorrow very, very closely in the morning. Just wanted to share that with all of you. If you're in premium, you'll probably see some sort of alert regarding either a breakout or a breakdown. And that's really the SPY right now. Overall, the trend is still good. You're still making higher lows and everything, but these are the types of things that can shift that. And then if we do really start selling off, then you got to start thinking about this. A very big bear market rising wedge. I wouldn't even call it a bear flag. I would just call this an actual rising wedge. You could even maybe look at it like this as well. So you're developing that pattern. You have a lot of resistance above you. You've got some bearish things taking place. It's very, very similar to other tops we've had in the market this year. So this is something I am keeping a very close eye on moving into the Qs. You are back testing your previous resistance area from September and October as a support, at least for right now. But same thing, if you go down to those lower time frames, it's all about this little support. On the Qs, it's around 284 to 285. You break that, there is pretty much a good amount of room. It's like very similar. On SPY, your support's 395. If you break that, there's not a lot of support until 390. On the Qs, your support is 285. If you break that, there's not a lot of support until 280. So you kind of have 5 points to the downside on both the SPY and the Qs if you break these supports that you've held so far for the last few days. But you're testing the breakdowns right now, so we will see what happens with that. Zeke is saying to look at the S&P 500 weekly candle. That's looking kind of bearish. So we still have 2 more days in the week, so it's not over yet. But yes, that does look a little bit bearish. You didn't even make it to the supply line. You know, I was thinking maybe on this rally, and if anybody was watching a couple weeks ago, I was talking about the potential for this rally, and now it's happening. But I was thinking that we could at least get like right up till here and then maybe reverse trend. We didn't even make it up to that point, so who knows? We'll see what happens. And in a way, you know, this is a bullish pattern, this descending broadening wedge. But if you can't hit this supply line, I highly doubt that any sort of a partial rise would matter right now. But in a sense, that is kind of a partial rise. The last 3 times you were able to get up to that supply line, and if you can't do it this time, that just shows some weakness from the bulls, in my opinion. Even though it was a good rally and everything, it just shows weakness that you weren't even able to test the breakout. So just like a partial decline would pretty much be something like this, and that's actually possible. If we were to test the breakout, we would have a partial decline, right? So you have this low over here where the bears never got you back down to your demand line. So if we just go a little bit higher, like I said, then there would be a 70% chance of the S&P 500 breaking out. But it's quite the opposite if you top out here short term, where you have that kind of partial rise. If you were to drop all the way back down, which I think that's unrealistic to do like this, at least quickly. It could happen over time. But it's just showing you that there's a little bit of a shift taking place, because so far you've gone back and forth from the trend lines pretty much every single time. And in both of the downside and the upside on this move, you haven't touched your trend lines. So you're kind of just sitting well within this overall pattern that the market's creating, which I think sets up a very large move going into the end of the year. Because you've had a very similar trend this year. It's not been too hard to figure out. Very, very similar. But now something's changing a little bit where you're getting that indecision right in between. So that could set up your crazy move, which either takes you into a crash going into next year, and I don't really like using that word, or the breakout that ends this bear market. But I think this period of the market, this consolidation period, is what's setting up the next overall cycle in the market. We've had a bear cycle so far this year, but I wouldn't say it's been like a horrible crash. We also could end this bear cycle and have a bull market next year. And I think this is kind of shifting us into that next phase. However, there's no way to really know what that's going to be. But I do think this is kind of the end of the typical pattern we've seen throughout the year. Whether we go into a pattern that's much worse or much better, I'm not sure, but I kind of feel like you've had a good 11 months of pretty much the same thing. Bear market rallies, the lower Bollinger Band, high volume stuff we always talk about on the stream. I think it might be time for some new stuff in the market. It's getting a little bit boring, to be honest. It's the same old thing. These trends, they change over time. You get different market environments. We'll see what happens. So moving over to small caps, Russell 2000 is rejecting the 200-day moving average and this previous support flipped into resistance. That is a little bit bearish. The dragon pattern, however, did play out beautifully. Even in a bear market, a textbook dragon pattern played out. You had your double bottom, you had your supply line break, and you went up to your golden retrace, the 618, and that's where you're pretty much showing your resistance. It could go higher, but you're showing the resistance right there. It is such a technical level, and this is the thing where people say TA is fake and stuff. You just got to ask them, why is the Russell 2000 showing resistance and trouble when it's sitting at the 200-day moving average, the 618 Fibonacci level, and a previous support flipped into resistance? That's as technical as it gets, and at the same time you also have hidden bearish divergence developing on the oscillators. So that's 4 different things showing resistance for the Russell 2000. It might be a little bit tough for it to kind of get above that, but you never know. Doesn't mean it's a certainty. And then we have the ARK ETF. This is one that looks a little bit interesting to me because the ARK ETF broke out of this wedge. It's still above the support zone. It actually got even more classic bullish divergence, making this little fake out low just before the move up. So you're still on a wave of classic bullish divergence. Did pull back 5% today, but you can see on this one candle over here, the ARK ETF was up 8%, and then the candle before it was up 15% in one day. Just to put this into perspective, in 2 days, this was up 22%, right? You were only down 5% of that today alone. You haven't even given up this 1 day of gains in like a week, in both 3 trading days, but in like a week. So it could still be looked at as a back test of the breakout for the ARK ETF. So even if this bear stuff on the SPY plays out, there's still the chance for growth stocks and mid caps. I know it sounds crazy to hear that, but there's still the chance for them to outperform if this backtest is successful, even if the market does still sell off. We've seen those environments before. It's been a very long time since we've seen those environments, but like I was just saying, when we were looking at the SPY on the weekly, we could be entering a new market cycle. We just don't know what that is. And honestly, if there were any market cycle I would prefer, it would be the mid caps and the growth stocks outperforming, because that makes it very easy for me to share swing trades. So we'll see, but that's currently where you're at. Let's just talk about the VIX really quickly, which is still inside of this down-sloping channel. Did not break out today despite the down day in the market. And this is another thing where it's like you want some hopium for the stock market to keep rallying. It could be this little VIX bear flag taking place. But again, if you go back to earlier in the stream, we talked about that 15-minute setup with the head and shoulders, but also the wedge. It's probably going to come down to that. So we're going to be getting a breakout or a breakdown tomorrow morning. It's just a question of waiting until then. So it's just a waiting game for right now. That's why it's a little bit tougher for me to say too much on the stream tonight, because we're just waiting for the next move to take place, and then I'll probably be able to talk a lot more about that tomorrow night on the stream. But just talking about some individual stocks, Fisker did pull back today. If you watched last night's stream, I literally said it could be setting up for a back test move, and that's what we're currently seeing. It is back testing. Keyword is testing. Just because you fall back into your previous support zone or resistance zone that you broke above doesn't mean you're going to hold it for sure. You're just testing it, and the big question is, can you bounce off of it? And if you can, it doesn't get much better than that. If Fisker can start to bounce over the next couple of days, despite if the market sells off, and this is what I was talking about with the ARK ETF also back testing, if these types of stocks, which they are pulling back with the market on a down day today, can start to separate even if some large caps keep selling off, that's what could really, not just from a technical standpoint, separate something like the ARK ETF and mid caps from large caps and tech stocks. But just from a money flow standpoint, people will be seeing, okay, Microsoft, Amazon, Apple, well, not actually, Apple's kind of in its own place right now, but Microsoft, Amazon, Meta, all those names, those large cap tech names that were the best performers over the past decade but got crushed on earnings, if they just continue to underperform, money is going to go somewhere. Right now, I feel like it's just out of the market in general, apart from this rally. But if the money is going to move somewhere and it's not going to be there, it could be into these types of names, not necessarily like specifically Fisker, even though I love it, but just these types of names in general. So if we get that shift, you all know I'm going to be very excited, but it's hard to really talk about until we see it start to happen. But if you see that day where SPY's down 2%, SPY's down 1%, the ARK ETF is up 2%. That could be the start of it. So we'll see if we get that in the next few days. If we do, I'm probably going to play this clip back, but we'll see. So yeah, Fisker is back testing the zone. It pretty much bounced off of $8 today, right off the support level. We get onto the 1 hour chart. You can see that first bounce, we went up to about 830, went back down to around 8, bounced off of it a second time. So the first 2 tests of that previous zone did hold. You're probably going to need a little bit more than that. Maybe some hidden bullish divergence helps you out. We'll see. And CLOV today was down 7%. This is what I was talking about last night. We talked about like that breakout, but I was saying like it really just doesn't matter. You can say breakout on CLOV as much as you want at this point. It just does its own thing. Like the trend is still in a downtrend. Yeah, maybe it's back testing the breakout. Maybe that gives you another little push higher again. Maybe you set up for this kind of inverse head and shoulders looking thing like over here. That would be your neckline. This would be your other shoulder. This would be the head. Maybe you set that up as well and everything, but until you just start getting good price action, you can get all the patterns you want. It's still difficult to really say much, even if we do get the short-term bounces. It feels like a lot of the patterns do play out, but you just get like a little bounce like this, and then you sell off again, or like that, or like this. So we'll see. I feel like the buyers are there when the bullish setups appear. It's just like everybody takes their profits as soon as they get profits, if they're swing trading it, or if there's somebody who's like back holding, maybe they just trim their loss or lower their position size when it's not as big of a loss. It's just, that's what happens when a stock gets really just hammered down like this. Every bounce can very easily get sold because there's already been so much selling in the stock. It's like kind of all it's known literally since all-time highs, and it's crazy to even like look at this chart right now. But since all the way up there, if we go over to the weekly, just look at how insane this is. From all the way up over here to all the way down over here. Crazy. And Zeke saying check what I sent in technical trades when you get a chance. It's on the daily. So we'll take a look at that as well. But that was Fisker and CLOV. And Zeke is sending some, this looks like the SPY. Yeah, this is the S&P 500. So you can see everything on the screen here. So you have a first time rejecting the 200 EMA, the second time, and then the third time is when you really sold off. This was in, I believe, 2008. Yep. And then this is us right now. This was your first time rejecting the 200 EMA, or the 20 EMA. Then you have the retest rejection. I think you meant to write the 200. Then you have the retest and rejection of the 200 EMA, and then the retest but the fail to touch it. We go back up over here, you fail to touch it. So I was talking about this same exact thing on the SPY weekly, where you had multiple tests of this supply line and you're kind of failing to even touch the supply line right now. And Zeke's kind of building on top of that argument. My 200-day is messed up over here, but he's building on top of that argument by saying you have these 2 touches right over here of the 200-day moving average, this yellow line. And on this rally, you haven't even rallied up to touch the 200-day moving average. So it's showing you that there is a certain relative weakness in the market where the bulls can't even get you back up to the main resistance points, which is that supply line, which I can draw right over here. This supply line, which also perfectly lines up. This is like 2 picture perfect, like the 200-day moving average and the supply line perfectly lining up. Most likely the reason why this supply line is working so well is because it lines up with where the 200-day moving average already is. That's just where the price action has gone to. So it's kind of created that supply line. So you can see here, that is a very, very big, that is probably the biggest technical indicator you can use for a market top right now, overall. And we will see if it happens. So that's why you could probably already tell there was an amazing round of swings over the past month during this rally. But over the past couple of weeks, I've kind of very quickly stopped sharing many swing alerts because of the fact that we're getting closer and closer to this resistance zone, which I just don't really see us breaking until later. That could be even this year. I talked about that potential Santa Claus rally that I'm hoping for, but we're not even close to that right now. So we could see a sell-off first. That's why I'm just being a little bit careful right now. I mean, just look at the market today. So we also looked at Fisker and CLOV. Let's look at AMC right now. It's continuing to pull back after a really good few days last week. It pretty much went up to almost the third target of the swing I alerted last week, like right over here. And now it's pulling back. One thing I will be watching in general is this bull flag potentially forming on AMC. So you can see over here, you've got a little bit of a bull flag forming. This is very textbook stuff. You have a very big run up. You have this flag formation. You get some hidden bullish divergence with that as well. Like I said, even if the market pulls back, we looked at the ARK ETF, we looked at Fisker, now we're looking at AMC. There are still names which have the potential to go in their own direction. It's probability wise, it's not likely, but it's possible. So you want to even just get these names on your watch list just in case we start to see that shift. And then even apart from that flag and everything, it's not perfect, but you could kind of even look at this a little bit like a cup and handle. So your neckline would be around that 845 resistance level. If you go over here and take out this $8 level, there's room up until like 930-ish, which is your 200-day moving average. And then there's a lot of room up until like 1277. So it's crazy to say, like, you're already up like 50% in a week or so. But if that flag pattern plays out, we've seen crazier moves on AMC. And if we go over to the weekly, yeah, you might be up 50% in a week. But look at the context on the weekly for AMC. Ignoring this little red island over here, you have classic bullish divergence. You're at the PCZ of a shark of a bat slash Gartley. You're at a huge support level dating back to 2019. You're kind of breaking out of this wedge. Let me delete this for a second. If you chart these like pretty much 3 highs over here and you ignore this one, you're kind of re-breaking out of the wedge. Even if you don't chart those and we just extend it like this, that would be your potential partial decline inside the wedge. There are the names. AMC right now is something I'm still keeping a close eye on. It was a very great start to the swing, but there could be a lot more potential here. And we looked at, I think recently, the short interest is still there for AMC as well. So the crazy moves could still happen in their own parts of the market. You just got to be able to find them before they do, which is definitely easier said than done. So that's AMC. GameStop, I'm still keeping an eye on this one. I didn't even really test the breakout today, but I've been saying this. I said it on the stream multiple times right over here, and then I alerted to premium members the same day it broke out. The calls went up 500%. I'm saying it on the stream again multiple times. GameStop at the top of this range. Breaking above this range, a move like this could happen again. It happened already once. It could happen again. I'm not the only one that's watching this. There's probably a lot of people with alerts set up right around $28, hoping and hoping for this breakout. The whole entire Wall Street Bets army probably has a whole entire chat about this right now. I don't even know what they're doing, if they're still doing everything with, like, if they're still talking about all this stuff nonstop in the squeeze to like 1,000. 1,000 is probably not coming. But you got the breakdown of the wedge we talked about last night. However, not too bad. You didn't really dump or anything, and now you could even be creating a little bit of a newer flag. It's not too far away from the top of the range. Still, you made a higher low yet again. The price action is still good for right now. You're making higher lows within your range. You even had a fake breakdown over here. Now you're back at the top. Even probably apart from this, this is kind of like Wyckoff accumulation on GameStop. So let's have a little bit of fun here for a second. This might be boring to some people, but it's fun to me. And if we take a look at this side by side, you can see we're ignoring pretty much this part though. We're ignoring that part right over there. But take a look at it, something like this. It's hard to line it up right here, but something like this. All right, you can see the price action is very, very similar. Got your spring over here. You're kind of in this phase right now. This might be your LPS taking place right over here. You got that break in the next couple of days. That could be your Wyckoff accumulation. Maybe it just also happened like somewhere here as well, something like this. That actually looks pretty good as well. You just didn't really get much of a spring. But now you have one. So again, market might suck, it might be whatever, even though it's been a great rally, but market might go back to sucking, whatever it is. But we're starting to see some other stocks very slowly doing their own things, and that could be a very quick way to make money even in a bear market. So it's just important to keep an eye on stuff like this. And yeah, it's GameStop. So let's look at some large caps. We've got Apple down 1% today. Really nothing changed since yesterday. Just pull back a little bit more. If we go down to the 1 hour chart, however, let's actually go over to the 4 hour chart. You see that it's breaking down from a little bit of a bear flag over here. So there might be a little bit of more selling on Apple. It's also, I think, around the 200-day. Oh, it didn't even make the 200-day moving average, very similar to the SPY on the daily. Amazon rejected that 103 level, which used to be support over here. It rejected that level and it flipped it into resistance right over here. It has a gap fill down over here around 89. So Amazon's kind of not doing too well right now technically. Tesla, I talked about this bear flag last night on the stream. It's not really that much on the daily, but if you go down to lower time frames, you could see it broke down and it was already starting to play out today. Even on the 4-hour, you can see that over there. It's like bear flag, sell off, bear flag, sell off. AMD down 5% today. It's back testing this little low from July, so this is an important level to watch tomorrow. This even dates back to May of 2021, this whole entire support in the beginning of 2020 and the end of the beginning of 2021 and the end of 2020. So that's a big level for AMD. NVIDIA actually reported today it was up a couple percent after hours, but it was down 4% today. So it's probably somewhere around like over here. I think it's around like over here. So it's still in the same exact area, pretty much. It's just right over here. However, this is an abandoned baby. I think this is a bearish abandoned baby candle pattern, which is a top / bearish reversal pattern. So it's probably going to be blurry where you can see it. That is your bearish abandoned baby. So that's actually forming right now on NVIDIA. But it was a very nice move. And you've also got the hidden bearish divergence there. It's been a very quick, I mean, since pretty much the last month, it just went 50%. If it pulls back a little bit right now, that wouldn't be too crazy in my opinion. And we also have Microsoft, which was flat today after breaking out of the wedge. So interesting, it's still kind of holding its gains. It is under this resistance still, but it's holding its gains after the wedge breakout. Google was actually green today. It's kind of in the middle of nowhere there. Let me actually rechart this a little bit. I'm going to completely just start fresh with Google because I want to look at this. You can see right over here, Google has a 70% chance of breaking out. Actually, I wouldn't say that. I wouldn't even call this a partial decline. We'll just put it like this. Google is just testing a breakout of this descending broadening wedge, because you could maybe call this a partial decline if you line this up like perfectly. It's slightly a partial decline, but it's not too well off the demand line. So I'm just going to look at it like this. But if Google does break out of this descending broadening wedge, it does have a gap fill and some resistance up around 103. Maybe leaving a little bit before that at 100. So it's an area of resistance regardless. You have this supply line, you've got some other levels, like your whole entire zone over here pretty much. So it's testing the breakout, but even if it does break out, it's still got a lot of work to do. However, if it can get back above 103, that's when it gets really interesting, because then you have this whole entire zone from like 103 to 120, which could be pretty easy to deal with. So there are certain names doing okay, despite how some of the indices look. And yeah, make sure to hit the like button if you didn't already. If you have any take requests, feel free to drop them in the chat and I'll take a look. If you want to join premium, link for that is in the description. Zeke is saying overall market pulls a bit, and maybe AMC and GME run. It's happened before. Joel, we literally just looked at Microsoft, I believe. XLE, this is the funny thing. I was talking about this last night. Just breakout after breakout after breakout. Let me reset the chat really quickly. Unless somebody's trying to... Let me not even just make jokes about that, okay? What was I going to say? You had literally 3 fake outs in a row. Fake breakout over here, fake breakdown over here, fake breakout kind of over here. It's tough. This is such a big area for energy that it's just really tough to tell, because you're getting a wedge breakout, then you're kind of going above it, then you're below it. It's just really hard to tell. So you're just still testing this area. It's really the same analysis. You do have a classic bearish divergence. Maybe at this point, just extend this. Maybe just do that. but you're still just not really at doing anything. We pretty much looked at you might have just ruined the stream, but I already looked through Microsoft, Amazon, NVIDIA, pretty much most of the well-known large caps. I just took a look at most of them. GS looks like it filled that gap we talked about, pulling back a little bit right off of that now. It is overbought. MACD looks like a huge mountain over here. So this could be an area where you see a pullback. You do have a gap fill around 367. And even if you drop back down into that, you do have this support zone from 348 to 358. So maybe it falls back down to the back test. You could probably even draw like a demand line like that. So even it could just drop into this and maybe hold it or something, but it looks like potentially pullback time soon. Disney, it never really got up to this gap fill. Right now it's just sitting in between two levels, 90 and 100. Those are your supports, 90, resistance is 100. You had a little bit of classic bullish divergence. Maybe you could draw a little bit of a pattern here on lower time frames, but with all the gaps it kind of makes it hard to like really complete the pattern. So it's a little bit confusing, but it's just testing levels right now after the earnings. SOFI was down 5% today. This doesn't look too shabby to me though. As long as you can continue to hold above $5, it looks fine. It's just in this big accumulation range after a very large sell-off. Not financial advice, but literally going long here and setting a stop under 470-ish. It's pretty good reward to risk. It's not a certainty that you will make money, but the reward to risk on that, or to stop out versus going to the top of the range, is pretty good. I don't know if I would put out a swing on that though, because there's just not a lot of variables right now. But you have a 2 to 3 reward to risk just playing the range, let alone the range breakout. I mean, that would be a lot higher. So just the area that it's in is pretty interesting. I mean, maybe you could chart like this, but you did reject it twice. UWMC, wow, it went to the top of this little range. So it got above the 200 moving average. Now it's just showing resistance at this high from August 11th. Short term, there's not much for me to say. It's just sandwiched in between the 200 moving average over here, which also lines up with some resistance, almost supports, kind of like a whole entire zone right here. So it's just sandwiched in between these two levels right now, just waiting to see which one it breaks through first. Bed Bath & Beyond, it's like in reverse autopilot mode right now. That's really the only way to put it. I wouldn't even really draw that into a wedge. Like, it's just kind of not doing much. It looks like it's testing COVID crash lows, which are not all-time lows, but very close. I mean, in 1995, it was around this price as well. So it's like, if we're gonna look at this chart, you break this level and the next level is like $2.25. Actually, you also have a little bit over here at $2.85, but we're talking about levels from 27 years ago. So it's tough. It really is tough. But those are the levels that it has come down to. Just take a look at this chart though. Bed Bath & Beyond. It's just funny to look at. I mean, it's so good until 2015 and then so bad. Joel, thank you very much for the $5 tip. I also appreciate all the requests. It's just we already looked at them, but they'll be in the timestamps for sure. Like, I'm pretty sure every single one will be in those timestamps, but I really do appreciate the super chat. Let's get some vibes in the chat. Or Joel with the $5. Been watching the stream for a while. I really do appreciate you. I hope you're doing well. Thank you again. And TLRY. Another one where it's just like, look at this. Like, it's crazy. On the weekly, however, it does look like a little bit of a double bottom forming. And you could probably draw like a trend line like this. Might be somewhat, I wouldn't even really call this a bear flag. I just call it an upsloping channel. It's a little bit large for a bear flag. Got Elon Musk up there. I don't know why that showed up so late on this stream. Hopefully we could fix that. but it looks like you're just in this upsloping channel. You ran up to 440, which is this resistance level and the 200 moving average, and now you're just kind of waiting. But you do break down, support's pretty much back down around $3, so it's not like it's really that close or anything. So we'll leave it on good vibes. Thanks to Joel. And I appreciate all of you watching the stream. Make sure to hit the like button, hit the subscribe button, join the Discord. We need to get the numbers up. It's been a little bit slow in the Discord, so if you're not in it, join it. We've got like over 2,000 people you can meet and connect with about trading, so go check that out. Yeah, you want option ideas and day trades and stuff like that, which is probably going to be my focus for the next couple of weeks if this pullback in the market does come. That'll be taking place in premium. If there are swings I can share, I'll be sharing them with all of you as well. But right now, I don't know. I'm kind of feeling the day trading vibes again for a little bit. If you're in premium, I actually kind of stopped with the day trading for a couple of weeks for the most part. I mean, there still was day trades, but not that much, like 2 or 3. And we had a very nice round of swings. You can see over here, these are all in premium. This was actually like 50%. So now most of these are kind of hitting their targets, and we might go back over to the options for a little bit while things look interesting in the market. So have a good night. Thank you for watching the stream, and peace out.